Hey there, it's Shannon Paul and Paul Realty Group, and it is Motivational Monday. This is a different kind of Motivational Monday as COVID-19 has struck our nation, and we're all scrambling, trying to figure out what to do next and how this affects our personal finances and our real estate investments, and more than anything, our personal health and hygiene and those that are our loved ones. So today we're going to talk about something you've probably already heard in the news, and that's that the Fed has cut interest rates to zero. Now, what that does not mean is that mortgage rates are cut to zero. Fed rates and mortgage rates are different. So you might be asking, what are the Fed rates? I'm going to read it so we say it clearly. The Fed rate refers to interest rates that banks charge other banks for lending them money from their reserve banks on an overnight basis. Basically, they have to maintain a reserve equal to a certain percentage of their deposits from the Federal Reserve Bank. So basically, the Fed rate is not the same as mortgage rates. So then, how do we get better mortgage rates, and what does that look like? Well, the Fed also announced that they're going to commit to Treasury purchases of $500 billion and agency mortgage-backed securities of at least $200 million over the next coming months. So this should help stabilize the mortgage market and help return interest rates back to where we saw them a week ago. May or may not happen. Nobody has a crystal ball, but that's the goal. Now, due to the uncertainty in the market and in the economy, we are going to see rate fluctuations over the next week, upcoming months, and potentially through the rest of the year. So what does that mean for you if you're looking to purchase a home? If you're looking to purchase a home, number one, stay connected to the professionals in the industry that are cutting edge. This news is changing so rapidly, it's hour to hour, day to day. Make sure you're connected with somebody who is top-notch, professional, and knows their industry well. Number two, make sure to get pre-approved with a local lender. Getting approved now can help you understand what is your purchasing power at today's interest rate, and if it goes up or if it goes down, how does that affect your purchase power overall? Now, the lower the rate, the higher purchase power you have. With rates this low, you also want to check in with your lender to find out, if I lock my rate, what does that happen? What are your rules and regulations around that? And if the rate changes, do I and am I allowed to change my rate with that change? Talk to your lender. They're going to give you the specifics about that. I have notes, so I keep us on track here. Now, I want you to remember, don't believe everything that you see in the news and in the media. There's a lot of misinformation as well as a lot of information. Again, look to your professionals to guide you through this time, especially when you're talking about your finances, your real estate goals, and of course, your own personal health. As always, please ask me questions. I've been getting questions asked all day long about rates and volatility in the market and what's happening and where are values going. And let's connect. Let's have the real conversation about what you and your family goals are, whether it's purchasing soon, whether it's purchasing out farther, if you're looking for investments, if you're looking for single family homes. Whatever your individual goals are, we need to map out a plan and figure out how do we safeguard you and your financial future. As always, I love you guys. Thanks for checking in with me. And stay healthy out there. Wash your hands. Keep the social distancing up. And we shall get through this together.